Welcome to the Burrow. It's Lala Bunny, head trader at Bimbo Trading Academy. And the topic of today's video is the difference between a trading halt and a trading curve. Now, I never heard the term trading curve before until I looked it up and realized it's called a circuit breaker. And many of us who trade, we have heard of circuit breaker halts. Let's get into it. Now, full disclosure, I will be reading pretty much straight from Wikipedia, and that's just information that's publicly available. It's not copyrighted or anything, so I should be good to go. Okay, let's get into first a trading halt. A trading halt occurs in the U.S. stock market when a stock exchange stops trading on a specific security for a certain time period. And by security, it could be like a stock or an ETF. The halt, which can happen a few times a day per security if FINRA deems it. All right, well, FINRA stands for Financial Industry Regulatory Authority. The halt usually lasts for 1 hour, but is not limited to that. Well, actually, that's not true. There's some halts that are shorter. Yeah, they're gonna get into that. Trading halts can happen any time of day. Between the market open, I'm nearly sure it's between 9:30 and 4, and there aren't the halts in the pre-market and after hours. But go ahead and look that up. Let me know if that's the case or not. The listed company is supposed to call the exchange where it is listed 10 minutes prior to any material news that they are releasing in order for the stock exchange to halt the stock before news is released. The first 5 minutes of the halt is for news pending before any information is released that could affect a stock significantly, also known as the 5-minute window. Okay. Trading halts usually occur when a publicly traded company is going to release significant news about itself. The halt in trading for the affected security gives investors time to review the news and assess its impact. Okay, that's not the halt I'm thinking of. I'm thinking the halts when there's too much volatility and they like halt a certain stock. But this is saying that the halts actually occur when literally the company calls them up and they're like, okay, we're about to break some news. So then you just can't trade that stock immediately. I also noticed that when there's corporate actions, such as reverse splits or forward splits, sometimes you can't trade that stock. And it's so frustrating. I'm trying to figure this out because it will like I'll get a reverse. There'll be a reverse stock split, and because I own a fractional share, they tell me that my share will be available in like 3 to 4 weeks. So I just wait till that share, like, wait till it enters my account. But at the same time, I still want to trade that particular stock because there's a lot of volatility. Um, and I'm curious if all stock exchange, like sometimes if a stock is halted, it's across all different exchanges. So then who's trading it while it's, because sometimes it's, I can't trade it and it seems like the price is moving. So who is allowed to trade it? And I think I know the answer. I think it's in here. Okay. So do. All right. So there's also basically, it gives investors time to review the news, assess the impact. Another situation, yeah, so there's various situations for trading halts. Another situation when it might occur is when the exchange is uncertain whether the security continues to meet the market's listing standards. So they might halt it if it's about to get delisted, something like that. There are also trading pauses, which are defined under NASDAQ. If a security is subject to a trading pause, the pause threshold price field will contain the reference threshold price that deviates 10% from a print on the consolidated tape that is last sale eligible as compared to every print in that security on a rolling 5-minute basis. That means it's connected to the price. Okay. Let's see if there's more going on here. Okay. Regulatory and non-regulatory trading halts. Both of the reasons mentioned above are regulatory trading halts and are implemented on major stock exchanges, for example, the NYSE, American Nasdaq, and New York Stock Exchange. I don't know if the NYSE, I don't know if that's how you say it, but that's just how I say it. Formerly known as the American Stock Exchange, Amex. Interesting. Until 1953, it was known as the New York Curb Exchange. Weird that they would call it Curb Exchange. I want to know more about this stock market history. That is weird that they call it the curb exchange. The curb market, curbstone broker. Oh, oh my God, curb brokers on Wall Street, New York City in 1920, a year before the trading was moved indoors. So I remember people used to call up to I remember reading this that people would call up their orders to like a window. There'd be like the broker would be like up there and people would be yelling, trying to get their orders filled. That is cool. Journalist Edwin C. Hill described the curb trading on Lower Broad Street as a roaring, swirling whirlpool like nothing else under the astonishing sky that is its only roof. I didn't know this. The curb brokers had been kicked out of the Mills Building front by 1907, had moved to the pavement outside the Blair Building where cabbies lined up. They were given a little domain of asphalt, fenced off by the police on Broad Street between Exchange Place and Beaver Street. As of 1907, the curb market operated starting at 10 a.m. each day except Sundays until a gong at 3 p.m. So I didn't know this video was going to end up being about the curb market. Yeah, orders were shouted down from the windows of nearby brokerages, with the execution of the sale then shouted back up to the brokerage. Okay, I'll have to get a little bit more in. I should have done a whole video on the curb market, but I digress. That was a tangent, but a good one. So let's get back to these halts. Okay, so, okay, cool. There are 11 codes to specify in more detail why trading has been halted for a security. And the over-the-counter bulletin board, OTCBB, currently uses 5 codes. A non-regulatory trading halt occurs if a significant order imbalance between buyers. That's the halt that I'm familiar with. Now I know the difference. Regulatory halt and a non-regulatory halt. So the non-regulatory one is something that if you're a trader, you see all the time. When there's a significant order imbalance between buyers and sellers in a security. So that's when it's like the stock's going like this and they just give it time to level out, pretty much. So, before trading resumes, market specialists must determine an appropriate price range in which the security can trade. Unlike regulatory halts, other U.S. exchanges do not always stop trading a security affected by a non-regulatory halt. That's why I said sometimes the price is still moving and you're like, wait, I can't trade this stock, but it's still moving, and we got the answer. So basically, not everyone has to respect this halt, I guess, is the answer. Okay. There's the NASDAQ OMX, which I'm going to see what that stands for. I know the NASDAQ. What's the OMX? It's not telling me. I clicked it, but it's not telling me. Oh, it's just Europe. The European operations have been known by the company name OMX AB. Blah, blah, blah. Eh. Okay. I gotta look that up now. What else was it? Okay, NASDAQ OMX. Oh, sorry. Thanks for waiting. Yeah, it's European markets. I think that's pretty much what the OMX is. Okay, go back. So, um, okay. Oh, and then the OTCBB, which I mentioned before, the over-the-counter markets, they maintain their own trading halt list and a rolling 6-month history. Okay. Trading suspension. This is if a stock gets suspended, or I guess if any financial instrument. Trading suspension occurs when the United States SEC, Securities and Exchange Commission, stops trading for a specific security because of serious questions about a company's assets, operations, or other financial information. This might be like a suspicion of fraudulent activity, shady activity. In this case, the SEC, not the exchange, stops the security from being traded. And on its website, the SEC maintains a list of trading suspensions going back to 1995. I'm going to pause the video just because sometimes my video gets messed up and I just want to make sure I got that one locked in. And we just talked about trading halts. Now we're going to talk about what is a trading curb. So please tune in for part 2. Happy trading. Bye.